All right. Good morning, everybody. So that was fun. We now have a mixed bag when it comes to the earnings in the Mag 7 group. The punishment from their spending did not change their behavior. And so they're getting punished again for their spending. Google took it to heart. That's why we saw changes there. But Meta doubled down and said, we're not done spending. We're going to spend even more. Buckle up. It's going to be a while. So they're getting whacked. We do have economic events on the day. We're going to get some jobs numbers. We've got PCE today, and then we've got more earnings and still the threat of the election, FOMC. We're not done, right? We've got a long ways to go still. Hong Kong basically flat. Bitcoin is a mixed bag. Some of the Bitcoin space is up. Other parts of the Bitcoin space are down. So if you look at something like Riot, it's down. Lots of divergence, lots of confusing signals out there. So you want to be just really mindful of correlated market states. We're primed for a V-bottom flip back up the other way, right? I know it can seem really negative and you think, oh yeah, it's going to be a great day to go short. And it likely is going to be a good day to go short, but just be mindful that there's this statistic of 50%, 50. It's a coin toss, right? It's literally a coin toss that between 9:30 and 10 o'clock, no matter how bullish, no matter how bearish, the market can change and go in the other direction. That's an amazing statistic that should be eye-opening when it comes to probabilities and trying to define what we want to do on the day and why we never want to just hold some blind bias and not continue to check and make sure everything is continuing to do what we expect it to do. We're going to get Chicago PMI as well. And there's also some auctions today. We got the 4-week auctions. So front end. And data out of Japan. Again, seems nonstop with those guys lately, but that's just the way it goes, right? Like in waves or cycles. They capitulated and bowed down to market sentiment. They didn't raise rates again. They're scared. I mean, that's the joke. They're not scared. They're not the ones who make that decision. So they were told, don't cut, don't raise, don't do anything. And so they don't do anything. We are underneath the 0 gamma this morning, and we're also under the ADR half. If we get underneath that ADR level early enough in the day, or even just to that level early enough in the day, then we can go to the other side by the end of the day. 58.67. That would get us back inside of yesterday's range, right? We're not talking about a rally to all-time highs or anything like that. We're talking about just getting back inside structure. Can't tell you how many times we've seen the S&P open down on the day, and then we get one of those face-ripping rallies where we run it back in the other direction. Perfect example right here where we had closed on this week, and I am on a weekly, but we'll use it for a moment. We opened gapped down. We fell all week, and then we rallied back up, and we had 2 more weeks of follow through. Plenty of examples on the daily. I was just using the weekly because I was already there. But we've got a lot of examples where we open gap down and maybe we fall a little bit more and then we flip it and run it back up, especially when it comes to a disconnect, right? This drop came from investor sentiment, perspectives on forward earnings for big mega cap names. If we disconnect from them, and it wouldn't be the first time, we've disconnected from NVIDIA back in August when it had a really bad day. The market just, broke that correlation. NVIDIA went down hard that day, but we didn't. We did it first, and then we flipped and came back the other direction without it. So that can happen again. All it would take is a 0-day rally with, the 0-day flows, bring it right back in again. So 5,800, big round number, lots of option structure there, even if we don't have some line from Zero Gamma that says it. Tom Sosnoff, the guy that created the Thinkorswim platform before it was sold to TD Ameritrade, guy that created Tasty Trade, the guy whose heavy hand was responsible for weekly options and even having micros as futures. I mention all that to say the dude is really smart and he's been around for a long time. He mentions round numbers in a way that makes perfect sense. If people hate math, they suck at it, they're lazy, and they will do round number trades just because the math is easier. How much science is behind that statement? I don't know. But 40 years of being in the business on both sides of the broker platform, maybe he knows what he's talking about. So I pay attention to round numbers. We're underneath the 10 and the 20-day. We got the 50 underneath this at 57.50. So if we do get a nice breakdown today, we've got a level to turn around off of. I got two orange lines down there because I've got the EMA and I have the SMA, because I really don't like questioning which one of those I should use. And it's a question that I've heard for years. Gee, I don't know. Should it be the EMA, the SMA? I think one is better than the other. This group uses that and this. I don't care. I don't even have to choose. Just put them both on there. Then I don't have to. Same thing with the two green lines and the two blue lines. It's a 20 period, 10, 50. Just put them both. Solves the problem. 57, 54 if we overshoot the 1, 2, 3, 6, which would line us up for a really nice double bottom bear trap. We need to overshoot the previous low and go down enough to trap the bears, to convince them that we're really going down, to get them to get into the trade. Otherwise, it's not much of a trap, right? If we just come down and bounce on the line, well, that's going to be more of a cup pattern. Cups get a handle, and down we go. So if we want to go back up, in my opinion, we really want to overshoot the line first. Get through 5,800. You've got 57.92 cog line, and then you have 57.50 for a nice round number to bounce off of. Get that flip, trap the bears, squeeze them till they pop, run it back up into the 20s or the 10s. Speaking of the 20 and the 10, we are getting a 10-20 cross on the daily. It's not the 10-20 on the weekly, so it's not that big, but it's a big deal to get a 10-20 cross in the indexes. The 50 is also a big deal if we get underneath it, but we're a long way from that at this point. This bearishness today could carry on for the rest of the week into next week. Absolutely. Not saying that everything is going to be solved and we're going to run back up again, but we could easily dead cat bounce and rip into 58.60, 58.50, just back into these 20 and 10 levels after an overshoot this morning and then a rip back up. I don't know that we're going to get that. Nobody does, right? But it's certainly what I'm watching for this morning. We have some gaps that need to be filled also. there's two gaps. Where we closed at 4 o'clock, where we closed at 5 o'clock, and then where we're going to open this morning. Those will be the three different gaps, basically two gaps, right? So the 4 o'clock close and where we opened at 6 o'clock, and then the 5 o'clock close and where we opened at 6 o'clock. There's those two different ones that need to be filled. Then we'll have the other one from where we opened down here. We are underneath the 3-week moving average and the 0 gamma line. We're already underneath the volatility trigger. We're in a bad spot when it comes to options space. We're a long ways from the put wall. That's not really an issue. And to get to the put wall, we have to break that 10-week moving average. I don't see that happening today unless something comes out news-wise that we're not seeing at this point. Even the news that we're going to get today, I never discount news and say, you know, it doesn't matter. It matters, but it's not big news stuff, right? It's not like non-farm payroll kind of jobs data. That would be really important. So any jobs data at this point carries weight. But unless it's the really big jobs data numbers that we need, then it's just another data point, right? I don't see that it could be negative in a way that could send us down to the 10-week and the put wall today. If we can't disconnect from the Mag 7 group today and get some of that 0-day flow, we could stay weak, get down into 57.50 and not rally back out. That would put us down into the 10-week area. Maybe if we get close to it, we'll start to gravitate into it. And then we could chop around, crisscross back and forth through it. We could see that sort of activity, but I still don't see us getting into the put wall today without something really negative added to the mix. We don't have a market maker move at this point either, implying that they're not hedging in the front end this morning. This is a really long fall. It's really steep. That sets us up for a failed bear flag play. Just got to get above the 786, which lines up really well with the ADR half this morning. We're already back above VWAP. That's a good start. So we get through the half, get through our own Globex high, start closing these gaps. That puts us back inside of yesterday's range, and we get to the upper ADR. All we got to do is get above this ADR half or our own 786 and start working it up. This is my failed flag play. Because if you think about what a flag should do, make the move down, that's the pull. Then you get the flag, and then you continue the move to the downside. If the flag fails, then we would go the other way, and that would form a big old cup, right? That's the idea. So one pattern turns into another pattern that turns into another pattern. That's the way it all works. A rejection here, getting into a new low of the day, which is easy enough as a line in the sand, gets us down into liquidity through the round number, down to the cog line, break the cog line, get to the full ADR, and on down we go into 57.50 options level, flip point. So this is the GTFO box to deal with right there. 11 points, 5,800 to 5,811-ish. Now, it's absolutely possible that we stay right here in our own Globex range and we just chop here all day. It can even get worse than that, and we can stay within that 50% range and just chop here all day. It doesn't owe us a run back up. and it doesn't have to get any worse than it is today. So as much as I'm pointing out that I think we're going to make a move today, retracing back inside yesterday's range and or really breaking down, we don't have to do either one of those. We could just hold the line and chop. We are below the weekly floor pivot, which of course means we're also away from our daily floor pivot. The daily is up here at 58.59. So any attempt to run back up inside of yesterday's range puts us within striking distance of that, and it's very likely we'll gravitate into it. Markets hit their pivot point 80% of the time. Doesn't mean we have to hit it, but there's an 80% chance that we will hit that line today. I like that number. Yeah, you like that number. The channels are red because we opened underneath them. Yesterday's channel is within the range of today's channel. Today's pivot point is lower than yesterday's pivot point. All of that implies a bearishness. The channel is wider than we would like. A narrow channel implies that we don't break out. Well, we already opened in a breakout. So that's kind of off the table. But it does imply that a market shouldn't run. We wouldn't want to hear that today because we kind of want the run. We want to run back up through this zone that we built last night and get into yesterday's range. But these channels don't make price move. They just give us some insight on the type of moves that we could expect today. Even with this exaggerated move that we got out of the Asian session and then through the London session, we still had a significantly narrow IB, all things considered. The IB being the open range from 6 to 7 last night. It was a pretty narrow range. So it doesn't look like much, this little volume structure that we have down here, but it does highlight the amount of trading activity that we've found at this low. In Globex, no less. So we call that an iceberg. We came down and we found last week's low and we found some assistance. If that low breaks, if that 5,800 breaks, then 57.50, 57.32, 57.11, things can start to get out of control underneath 5,700, but that's still a ways off. Otherwise, if this iceberg holds us up, at least for a dead cat bounce, run us into 58.40, 58.50, that the next time we come down and test into this zone, we can see how much more liquidity could be down there at that point. We tested the point of control of last week, and now we've broken it completely. So don't think that level has much to offer at this point. I wouldn't focus on 58.43 because it's last week's point of control anymore, but I would still focus on 58.43 because I have a sneaky suspicion that's a cog line. I haven't validated it. It takes months to validate a cog line, but I'm getting really close to just saying it's one, whether I validated it or not. $10-day, 30-minute volume profile and TPO. TPO also shows that little bump in trading down here, but it is also recording this bump back here. The other chart that we was looking at is just this week's volume, and so we know it wasn't recording last week's drop down on Wednesday. This one is recording both. We're not expecting any movement from the point of control on either one of these anytime soon. It would take a significant iceberg on this chart to bring that thing down to us. And we just don't see it coming. Now, we could stay down in this zone underneath 58.50 without really expanding below, say, 57.92. We could stay in that range for a whole week while we're waiting on things like FOMC, the election, all of that, right? During that process, that holding and waiting, we could stay down here, chop, and bring that point of control down to us. But other than that, I don't see it moving anytime soon. All right, 5x5. We see two different distributions. We've got the top one here, and then we've got the bottom one in here. When it comes to point of control, the only B that we have is a lowercase b. We don't use an uppercase B to read the profiles. If it's something that looks like an uppercase B, it's actually two different Ds, with the lower one in this case having the point of control. So we had distribution, broke out. Now we've got it again. Same thing with the TPO, except the point of control hasn't moved down yet. The point of control on the TPO is basically trades versus volume, right? It's not exactly perfect, but kind of get the idea. So we had more trades last night in this upper area, but we've had more volume in this lower area. This chart does highlight how much volume is down here, though, or how much activity we've had down here. And it wouldn't surprise me to see this TPO's point of control move down soon. And oh, by the way, look at that. It's a cog line, 58.32. Imagine that. Those cog lines are awesome. So if we do get the breakout, which it looks like we're starting a breakout now to get through that 786, then we have to get out of this gravity here, this high volume node. Get out of that, work our way back up into this volume structure, get through that, get the gaps closed, on and on, right? Up we go. The TPO that we carried forward from Tuesday to use on Wednesday's charts, we ended up taking that out, cut through it like it wasn't even there. I shouldn't have deleted that line. We have a new one from yesterday. So if we do continue this run to the upside, we have a VPOC overhead to deal with. That looks about right. Yeah. 58.79, basically. I wouldn't get hung up on it. It's not a game of perfect. So far, the failed flag's working out pretty good. It's the reason I built that strategy. So we're still 1% above the 10-week. And I've mentioned if we start getting too close to that 10, we'll gravitate into it, right? It just like inevitability. We just go to it. There's a lot of reasons for that. Options trades have a little bit to do with it. Using it as a target, self-fulfilling prophecy, all sort of technical analysis that applies to why we would do that. But the main takeaway is if you get too close to it, you're going to it. And sure, we could miss it by a couple of ticks. I've seen that happen, but more often than not, we end up overshooting it. Like we've seen back here and here. It happens, right? So we're at that point. If we cut underneath 1% above the 10-week and we start getting into, 0.9% above the 10-week, we're going to just go down there and get in. That would be the healthier thing to do. If we get this close and we don't go get it, it's going to be harder to rally back away from it again. We're almost 0.75% underneath the 10-day moving average. That's not as negative as we've seen in the past. 2% is about the norm before we start to turn around and go back. So any sort of thought on, we're oversold, we're stretched too far, it owes this sort of mean reversion. No, we're not overstretched. We're not oversold. We haven't moved too far. It doesn't owe us a pullback in the other direction. That doesn't mean we can't get one. We've been talking all morning about, at the very least, a dead cat bounce that pops us back the other direction. But I wouldn't focus on it as something that is owed to us, because at this point, it doesn't owe us that sort of move. 57.37 is the week's range. So if we overshoot that 57.50 level, we've got 57.32 cog line, which is just underneath that weekly range. And what we see a lot of times when we get to the week's edge is that we overshoot it. So it would make sense if we get to 57.37 that we overshoot it and get into 57.32 cog line before we flip. If we flip, we never know for sure, right? Looking at the markets over the last 5 days, every sector, every industry is down. The only two that are not yet in the negative, but they're basically flat, are building materials and technology. Otherwise, everything else is down. Utilities down 3% means we're near a turning point, even if it's just a dead cat bounce. The rest of them have more room to go first before we would consider that they're a bit overstretched beyond their mean. And levels that are important are getting broken, like the 200-day moving average. We broke that on healthcare. Now it's a hollow red bar. That implies that we broke it, we ran back up, and we closed higher than we opened. But it's red because we closed lower than the previous day's close. We've got the 50-period moving average likely going to get hit today on utilities because we're just above that line. We've got a destination target on staples down to 78, the 200-period moving average. We're close to a 50 touch on industrials. We already touched it on building materials. You kind of get the idea, right? Energy's underneath the 50 and the 200. Things are not looking good out there, but these are reset points too. They're gravity levels, they're targets, they're reset points, places we can bounce. And this is the falling tide scenario. Remember, we've been looking for this capital rotation, this growth versus value, and tech versus staples, and versus. Well, how about rising tide? Everything goes up. Falling tide, everything goes down. Okay, I'll take it. High correlation market state. So on the other side of today, you want to watch things like the Visualize tab. Not this. This isn't going to really be helpful. Go into where it says heat map, choose the index watch, choose the indexes. And these are detachable, so you can load more than one. Come in and say, get the S&P 100. What's it going to show you? When the market opens, issues are companies. This is the S&P 100, so there'll be 100 issues. How many are going up and how many are going down? Okay, that's an advanced decline line. Yep, but it'll also show you the volume, how much volume is going up versus volume going down. Yeah, there's market breadth for that too. But it also has the money flow. How much money is coming into the market, how much money is going out of the market. So we can see if we've got a high correlated market state for a rally today, we're going to need that rising tide and all boats. So we want, 90 plus names all advancing to the upside. The funny thing is if they're below yesterday's close, it may show them as declining issues because they're negative. I can't remember if it shows based on yesterday's close or if it's going to be based on today's open. I know there is one of them that uses today's open. And so as long as those names open gapped down but start to run, it'll still show them as positive because they're running now that they've opened, ignoring the fact that they're down from yesterday's close. You can stack those. So you got the S&P, you can do the NASDAQ, you can make your own index. So you can put the MAG 7 in there if you want to. You want to look for a decoupling in the market, disconnect from the S&P and the NASDAQ from that negative earnings that we see in Meta and the moves in the market that are anticipating more weakness in the rest of the MAG 7. We've seen that disconnect before. We know the market can do it. We just got to get it done. Otherwise, if this breakout that we're currently looking at out of my fail to flag space, if that breaks, or if we fail to get through the halfback, then we're very likely going to retest the lows and expand lower from there. Right? So here's the 786. That was the breakout point we needed. We got the breakout started. We got to hit these level by level and just work our way up. Otherwise, we come back, revisit the low, and we can go lower from there. Easy enough. All right, the MAG 7's down. Surprise. Technology's down. Nah. Surely. That's not a surprise. Growth, transportation, expanded tech, China ADRs, gold, gold miners, semiconductors, all down. Things that are up. What's that? Bonds are working on it. They're not up enough yet, but they're moving in the right direction. And Bitcoin stuff is up, but only some of the Bitcoin stuff is up. BITO and GBTC are up, but things like Riot are down. And not just Riot, but it's easy to pick on Riot. Look at the crypto space. We've got Riot, Coin, NVIDIA, Square, PayPal, TSM. All of those are down and they fit into the quote crypto space. But MSTR, ARK, Bitcoin, GBTC. So it just depends on what you're looking at, right? But that mixed bag isn't good for the whole bag. All right, it says Staples is up 3.5%. It's just an algo print at this point. It's that little dot way up there. Well, that's worthless. If we see something that's up in the morning, we want something behind that, right? That's not good enough. But what it does tell us is something in the Staples space had earnings, had a move, had news that it moved, and that caused this to move. So one thing you could do is open up the IYK ETF basket, see what names are inside it, and see if they're open or high or low this morning. Another thing you can do is just check on the names that are up and or the names that are down and see which ones fit into the Staples space, because that's what moved that ETF this morning. Looking at the S&P names that are up, we have 8. And we've got some health technology, finance, energy, minerals, consumer services. None of those look like a blowout move. Well, okay, BKNG, 6% move. That might have done it. Comcast, close to 5%. Maybe one of those two. Without opening up the basket, we're kind of just guessing. Names in the NASDAQ that are up at least a 0.5%. Things like DoorDash, some manufacturing consumer services names. That's not bad. We even have microchip semiconductors, two different semiconductors that are up, standing out against the crowd. A little bit of healthcare stuff through GE Healthcare. But now let's look at the names that are down. 16% of the S&P 100 is down. 21% of the NASDAQ 100 is down. And by down, I mean down more than 0.5%, right? These are the sort of names you need. Microsoft, Meta, Amazon, NVIDIA, Broadcom, PayPal. You need those names if you're going to get a rally, or we need to disconnect from all of that. And that's absolutely possible. But that would have us heavily leaning into zero-day options today. So you really want to focus on those, because it won't come from looking at the Mag 7 and seeing that help and that relief bounce and that kind of assistance today, right? It's just not going to be there unless they throw off the Microsoft and Meta drop and actually start running them back up. If that's possible too, that would feed into the rally and feed into an everything lift. But I think it'd be more of semiconductors than anything else, that if we're going to get that help, it's going to come from them. And why would we get that today, right? I don't see any reason that we should get it. Pot stocks are up this morning, but again, there's no real flow here to that. And they are beaten down underneath some key levels. I wouldn't look for this to be a good long-term trade or anything like that. But after the moves that we've had to the downside, we could get, a decent day trade out of these if they can start moving in the right direction. TLT is working on it. It's got drama, but getting that breakout is going to start with getting outside of yesterday's range. This is just a big, wide mess of trash at this point down here, stuck underneath 93. So we got to get through 93, get to the year-to-date anchored VWAP at 94, and then we'll see. It's not looking good at this point. So gold's been pretty amazing. Gold, silver, the miners, all of that. We're up a little bit this morning. Excuse me, up on the week. But being down this morning, just it's this slow bleed. So we're back inside last week's range, or we were. Yeah, we're still there, just barely inside of last week's range. There's our down right here. So that's not showing up on the weekly yet, but we're underneath it again. We're inside week breakdown. If we can't maintain that, then 41 is on the table, and then 40 is on the table, coming right back down to that breakout point. Needs to stay inside of yesterday's range at this point, which is the week's low. SMH, fake breakout of last week's range back inside the box. We're below yesterday's low at this point. Needs to stay above 245, or I think it starts to get a little ugly. We could revisit 237. And the China internet ETFs are down 0.5%. So that fits with the JD, Baba, Baidu, all those guys. Li Auto, XPEV. We'd want to see them collectively turn back around. It's been this focus for a little while now that with the indexes disconnected from the market, where we've seen some great moves in stocks all over the place, and the S&P and the NASDAQ just grinding and chopping and really not making great moves. So now we got impacted from an earnings from equities. It dropped us down. If we can disconnect from them again, get the flip and run back up, that's the base case argument on the day. This is the expectation. If I'm wrong, we'll break our own Globex low and continue that expansion lower. You've got targets either direction. I've got you all set up, ready to go. So be careful, be safe, have a good day. I'll see you all tomorrow.